what is infinite banking and why did it get started? You have to have a relationship with the client to be able to move around that much money. You have to help them understand their relationship with the banks versus the relationship with their own policy.
If anything, you might want to call it a savings account on steroids or something like that, but it's about saving your money in a very advantageous place rather than investing.
So thanks for joining this week on the Elite Sales Podcast. I'm happy to be joined in studio this week. Marlon Hernandez with FFL Excellence. Okay. We got John Background, FFL Elite Syndicate. What's up? What's up? And we got Jantale joining us remotely from Central Florida. You know, we'll get a chance to talk to him a little bit. Before we get started, actually, this week what we're going to be talking about is talking about the importance of relationships. You know, that's a big part of not just our business, but you know, life in general. You know, everything's tied to a relationship of some sort. We're also going to have Jantale who's going to come on and share with us a little bit about IULs, you know, infinite banking, whole life policies, utilizing cash value and maximizing it for whatever purposes that you need. So that's an alternative way for you to be able to utilize life insurance as a tool. And there's some really great and neat things that you can do with it. So looking forward to hearing from him on that part. But as far as relationships, I mean, part of the reason why I thought of that was because we had Jack Heller from Prosperity in town. You know, every time he comes in town, always hits me up and says like, hey, you know, he's coming in to do a training for some other group. And then he just said, let's grab dinner. And I'm always like, Jack, anytime you say, I'm there, because we always have a good time. And, you know, I always, aside from the personal relationship of it, like I also relish that opportunity to be able to talk to, you know, he happens to be a VP of sales, you know, other people, similar type positions, if they're they're a carrier rep or account executive. I want to be able to pick their brains. I want to understand how this business works, you know, the inner workings rather than just, hey, generally this is what we've been told. Now I want to be able to be like, all right, let's have a couple drinks, you know, let's talk a little deeper. And I always like to invite my managers so then they can get a chance to build that relationship, number one, but also for them to be able to ask their questions. So what'd you think of that dinner with Jack?
Well, it was a lovely dinner. First off, the Argentinian, you know, cuisine, they're known for their steaks. Yeah. So it was very delicious from the appetizers to the desserts. So no complaints there. But no, personally, Jack, he's this is probably, I don't know, like the third or fourth dinner that I've had with him. Yeah. He's always been a good guy, but this time, you know, he did me a solid. I mean, He did a special favor for me. On the spot. Yeah. And, you know, and I had to shoot. And I'm like, you know, I'm not going to pull him to the side and hey, man, can we go talk privately over here? Like, I didn't feel like that was right. I was like, you know what? I already tried through their corporate department. And I'm like, you know, so you
tried and they denied you on that request.
So to be clear, like, and I don't want to make it sound like the corporate side on Prosperity was mean or not understand. They're super understanding. You know, I had a payment plan for a certain set amount. Initially that was working just fine. But I felt like I needed a little bit more wiggle room considering that there's other carriers to consider as well. So they did accommodate. They did help me with the adjustment for the payment plan, but there was something more that I wanted, and they said no to that part. So I was cool with that. You know, I was like, all right, they're still helping me out. Like that's very considerate and nice of them, and I just got to do my thing. Like it's, you know, they set the rules. It is what it is. So you know, it's funny because like I did not have any intention. I genuinely was like, yo, let's go eat. Let's go see the homies. Let's go see Jack. Let's have a good time because that's normally, you know, what happens. But then I was like, you know what? Hey, Jack, can you do something about like, this is my situation? And, you know, what do you call it? The magic phone?
Pulls it up.
Takes out his magic phone. He didn't answer me, right? It was funny because he hears me, picks up his phone. What's your agent number? I'm like, oh, yeah, you need that? Like, and then like 2 minutes later, he's like, it's done. He puts his phone down. I'm like, what? I was like, thank you, bro. Like, so it was good. I mean, he's very generous and very kind. So I'm very grateful for sure.
Yeah, and that's an added benefit, obviously. So Marlon went through the proper channels and they couldn't do it. But you know, Jack is up there. He's got pull. He's got considerable sway.
And I didn't know how much power he really had, and I kind of still don't, but it's cool that he can and did.
Hope you're enjoying the video so far. Please make sure that you like, subscribe, comment, anything to help support the algorithm so we can continue to bring you more valuable content and continue to be part of your lives. Also, if you don't feel that it's providing you that much support since you're already at this point, like and subscribe anyway.
Yeah, so one of our first dinners, I asked Jack that. Like, so what's your position in the company? And then he tells me, he's like, I'm the VP of sales, kind of taking care of all the prosperity. And so my second follow-up question is, so who's above you? And it's like, the owner.
Oh, shit. Yeah.
Yeah, so he's up there. It's like, so you're really up there.
Okay, now I get it.
He's basically the second in line.
Yeah.
Prosperity.
Okay.
Well, the last time that we had him in the studio, I was like, hey, this is Prosperity, our carrier rep, and then he's like, well, I didn't want to correct you, but it's not a carrier rep. I'm a vice president of sales, and I'm like, I didn't really understand the difference. You know what? I really understood the difference. All of our carrier reps are great. I just want to say that I have great relationships with a lot of those people out there, and love grabbing a drink with them, having dinner with them. The difference that I recognize is like typically they and maybe this is our problem, but they always say, all right, well, yeah, no, let me treat you guys. I got this. And then when the bar tab starts running up, they're like, all right, I'm sorry, but
there's a limit.
There's going to be a cap, and just letting you know. And I'm like, okay. And then so that I've talked to Jack because we've gone to some nice places,
Yeah.
And I was like, hey, if you have a limit, I totally understand. I'll pay for the rest. Don't worry about any of that. He's like, it's fine. And I'm like, what about expense reports? He's like, hey, send it in. And then I'm like, whoa, what's your limit?
What about what reports?
Expense reports, because you got to write it off.
Yeah.
So now I was like, what about the limit? And is there gonna be issues? And I was like, okay, my man Jack.
Well, I think it's in the name, prosperity. They're the most prosperous. What's their slogan? Like, let's flourish or something? Like,
yeah,
he just wants us all to prosper,
Yeah. But I mean, yeah, that's and more importantly, the thing that Marlon requested for, without getting into all the specifics. He also didn't say yes right away. He didn't say no right away because he wanted to take a look at it. So he wanted to check to see, all right, what's Marlon's balance at? How long has he been with us? All this other stuff. And obviously, if he's at dinner table with us, you're trusted. He's not going anywhere.
If he did truly check all that out, he is very fast.
No, he needs to look at your overall landscape.
Yeah, and I mean, I did give him all the data. I was like, well, look, this is where we're at in 2 months. Now this is what it's looking like. But yeah, he knows what he's doing. I mean, he chose to help the right man.
Well, that's the important part of relationship. And that's the key distinction between, when people ask for stuff versus like sometimes people ask for stuff and they don't get it right away. And then they get upset. They're like, oh, this guy's a jerk. He doesn't like me or whatever it is. Yeah. That's not always the case. It's like, all right, I'm willing to go this far for you. How far are you willing to go for me?
Mm-hmm. Yeah, it's not even personal. It's just business. Yeah.
So I thought that was really cool to watch the whole thing unfold. I mean, as soon as you asked, I'm like, we have a really good shot of you getting that. So
yeah, and I had like I said, I didn't have any intention, no idea. I think the subject we were on, I was like, you know what, Jack, can you just a question? And then 2 minutes later, it's like, he's the man.
Shoot, like you said.
Yeah.
So I mean, that's one thing I would recommend for all of you guys. If you guys have an opportunity to get to know, account executives, people from the carriers, number one, write business with them. Because I think if you don't write business with them, it's hard for them to take you seriously. Because we have some people making suggestions like, "Hey, how about you guys do this? How about you do this?" And I'm like, I look at their numbers. I'm like, you don't even write with that carrier,
right?
And they're like, "Well, I would, except," and I'm
if
like,
"Y'all made these changes."
I'm like, they're gonna survive without you, so like, it's not that big of a deal. If you're a serious player and you're just showing like a consistent like type of activity that's beneficial to them too. I mean, they will try to go out their way if that's something that's reasonable. Mm-hmm. Okay. You've had a lot of carriers help you out along the way too, right?
Yeah. So I think it helps out with Albert knowing them and then helping them on a personal level. So, when you guys join and go to conferences, hang out at the booths, get to shake hands, get to know them individually, they get to know you so that whenever you have a little bit of a favor, there's a name to a face instead of just like, who's this random agent needing this much of a hassle to help out.
Mm-hmm. That's a good point.
And even with Jack, I mean, Jack's one of the best though. He knows how to take care of it. But besides him being one of the top guys in the VP reps, he prides himself as being one of the sales agents that's been in the business for a while too. So he understands where we're coming from. Mm-hmm. So when you have somebody that you can build a relationship with, either from a carrier rep to even just uplines, other people in different teams, you build these relationships, you get to pick up little things. So, you know, we hear little things from the grapevine, whether it's going to happen or not, or the rumors that could happen in the future. You get a little bit of a heads up.
Yeah. And Jack's a straight shooter.
Yeah.
You know, so like he'll kind of tell you, because I was actually talking about this situation. I was trying to get an exception for an agent. Agent had dead, and I was just trying to extend it out for this agent, which most situations when it's reasonable, I can normally use my influence and my relationships to be able to, you know, get them to be a little bit more lenient with certain things. There was a certain agent that got to a certain point and they just had this debt sitting around for a while. They were asking for an extension, asking for a repayment plan, asking for whatever. And, you know, for me, I'm like, that's my guy. So I gotta advocate for him. So I went and started asking. I'm like, hey, can we do this and can we do that? And then, you know, I kept going back and forth. And, you know, for me, a lot of times I get my way. But then it got to a point with this particular case, Jack was like, okay, well, he hasn't written since this time. You know, this has been sitting there for this long. He's like, if you don't take care of it, it's gonna roll debt to you. And he's like, Albert, you're a smart guy. You've been in this business for a long time. Wake up. He's got to fix it. And I'm like, you know, fair enough. For as good of a buddy as he is of mine, for him to like shoot it straight sometimes and just like put me back in perspective, I'm like, you know, I appreciate that kind of stuff.
He's looking out for you.
Absolutely.
Yeah.
So, you know, because I do, yeah, probably sometimes I leave with my heart a little bit too much. And you know, I'm just thinking, I want to believe the agent is going to take care of it. But look, it's also not unreasonable for the agent to take care of their responsibility.
Mm-hmm.
So, yeah, that's start of the relationships. I mean, as far as relationships, you also have a podcast that you're going to be doing right after this.
Yeah.
You know, tell us a little bit about that.
Well, we don't have a name yet. It's going to be myself and Victor Rodriguez, who's like my little brother. We're featuring today is Raul Curiel. El Cougar is what they call him. So he is a champion. He's got 2 belts. He's a boxer. I believe he's like 27, 28 years old. He's 13-0. He's undefeated. And we just got to see him this last Thursday at Fantasy Springs Casino in Indio. And it was sick, you know, just to be there. And that was my first boxing event. Victor has way more experience. He comes from that world, but we're going to feature him today, you know, so he's going to be coming in the studio and, you know, we're going to shoot a podcast. And really the vision is, you know, kind of like Yoel, you know, with his Hangouts thing where like they just, you know, it's his boys or whoever's here, like just a conversation. I want to run something like that, but I'm thinking, and you know, we're just in the beginning stages, so it's definitely going to change. But I think right now, I was thinking earlier, like, do I want this to be just business or, you know? So I think it's going to be kind of open to where I'll have someone, you know, like an athlete, maybe next week a business owner, maybe, you know, next week's just some friends, and you know, get some good conversations going. So I'm really excited. I mean, I don't know, you know, I think it's fun. I don't know where it's going to take us. And, you know, on that note, shout out to you, you know, thank you for being very generous with your awesome and expensive and intricate, you know, equipment that you have back here, and Bryce as well. We really do appreciate that. So we're excited to get that going.
Relationships.
Yeah. Thank you.
Is this your inaugural podcast?
So, you know, we started one, Victor and I started one, like a year ago?
I saw it.
Yeah, we started one. We called it like Money Moves with Marlon. Didn't go very far. It was just
how many episodes?
Just one episode. We did one in my backyard.
I think I've seen that. Yeah.
Yeah, it was cool. It was
lighting.
Yeah, we were outside, you know, and it's the good lighting. Exactly. It's just the sun's out there and, you know, good background, all that. But for one reason or another, you know, it just wasn't the right time. And I think that the team that we were working with, things didn't work out. Not that they were bad or anything. It's just timing, you know. So we did get a little taste of that. And I've always wanted to do something like that, but it really is just timing and money. Just like, okay, where am I at now? You know, where's Victor at too? Because I want to have a co-host. So I think it's a good time for both of us now.
Yeah, and I think that's the thing that most people need to understand, whether it's doing a podcast, building your insurance business, you know, starting whatever type of business that you want. you don't need to have it all figured out up front.
Yeah.
Like you don't have, it doesn't have to be like, hey, I know exactly what I'm going to do. It's like, just get started. You'll figure it out along the way. You'll realize, because you could think this is the best idea in the world. You start doing it, you're like, yeah, I don't really like that.
Yeah, exactly.
And you could pivot in other direction. So the thing is, as long as you get going, and that's an exciting venture.
Yeah, like I said, we don't even have a name. I don't really know where it's going to go.
Punch me in the face.
Which, by the way,
that one's already taken. So
speaking of punch me in the face, shout out Sean Mike. It's his birthday today. So
happy birthday, Sean.
If anyone wants to, which I don't think he's a big fan of, like the birthday text messages, but if you really feel in your heart to do so,
I'm gonna text him.
Go ahead and do so. I mean, I personally did. I know he hates it, but I was like, hey, just wanted to wish you happy birthday. Just want to take this moment to tell you I appreciate you for everything you've done for this company, for me and my business up to this point. So, it's we can't take life for granted, and sometimes it takes like a birthday for you to actually say something that you feel on a normal basis anyway, but you don't say it on a daily basis.
It's true. Do we know his age?
45, 46?
45, 46?
I think it's higher than that, but I think he'll take it.
Okay.
let's just make it 45.
You're getting a comp increase with that. I wanted to say something. Nice. If John said earlier that you're talking about the importance of building relationships and getting to know these reps, and you made a suggestion to, when we're at conventions or conferences, whatever, like when you see them in the booths or the tents, whatever, go and talk to them.
Yes. And,
I was just reflecting as you said that, and I think I've been here 3 years, and like the first year and a half, I was like, that is not that that's dumb, but I didn't see a point to that. I'm like, I don't want to meet these people. Like, bro, let's go get a drink. Let's go, on some real, like who,
let's have more fun.
Who's Jack? Who's what? Why do they matter? On some dumb-ish, on some, lacking intelligence. But, I remember, you probably don't, because I know, you talk to a lot of people, but I remember one time we had a convo through text where I think I told you like, I don't really see, I don't really see the point of me going to this dinner.
Right.
And, you came back with like, well, look, like everyone, every business, every company, it's made up of people. Like these are real people, these reps, these people that we're emailing, and you never know when you're going to need help or when they're going to need you. And you just never know. It can't hurt you. Right. And you mentioned some stuff like they could help you sponsor events and just mutual benefits and stuff that I didn't really understand and see because I think I wasn't either big enough or, I don't know. But now it's like, damn, like this is a perfect example. Like this dinner was like, because if I wasn't anybody, and maybe even if I wasn't anybody, but through your relationship with him, like he maybe would have just done it because of you. Like, all right, I know this is Albert's boy. I don't really know him, but I'm still gonna do it for Albert. But I know I'd like to think that Jack knows me a little bit because we've had a few dinners. But that is, it's very true. Like I would echo that, and I just wanted to share that because I don't know if people feel that way. I know I did.
That's a great point.
And it cost me who knows what, and thankfully because of. That's one thing I've learned from you, that you don't overlook that, whether it's Bobby or whatever rep from, other carriers, is you take the time because you understand that you just never know what's going to happen, when you're going to need help. And now that I'm going through in this stage in business, going through certain things that I wasn't going through before, I can see the importance. So it's like, okay, I need some help, and, it's always good to have those relationships. So.
Absolutely.
Yeah.
Well, I'm glad you learned that, because the reality is if Marlon needed something, I could go to Jack as an intermediary and just be like, hey, my guy Marlon needs this. Can you do this? And he probably would.
Right.
But, that's not what I want long term. I want everyone to have their own relationship.
Yeah.
With the carrier reps. So Marlon go to him directly, advocate for his people,
mm-hmm.
Do what needs to be done. And the thing is, you don't know what you have out there until you actually put yourself out there.
Mm-hmm.
So
mm-hmm.
that's a. So then, since we're on the topic of relationships, as far as Marlon not wanting to go up to introduce himself, not even just to a carrier rep or account executive, let's just say you're at an event, which we got sales conferences coming up in October.
Mm-hmm.
I highly advise you to get out to the one local to you, or if you want to fly out to LA, you guys are all welcome to this one. But when it comes to relationships like that, the thing is, I've been in that position like Marlon and just been like, should I really go up and say what's up to these guys, to this vendor or to this carrier, to whoever, this representative, like, should I even bother go introducing myself? And it's never been like it's never been an ego thing where it's like, oh, I'm too good for these people, like these guys can't do nothing for me. It has nothing to do with that. Ironically, it's always like, well, why do they need to know who I am? Like, I'm not that big of a deal. Like, won't make a difference. Where in reality, it's like, how do you become someone of importance? How do you become someone of influence? How do you become someone that can get things done? It's like, you got to go put yourself out there. This is the only way to make things happen. Now, obviously, for me, like, it worked out really well because, FFL, I got in at the time when it was really exploding. And then I happened to build a team. And then, these carriers took notice. They're like, who's this guy? And then so a lot of them came up and introduced themselves to me. So, I'm a naturally friendly person anyway, but it felt really cool that they came up and introduced themselves, because I was like, why do you want to know who I am? But then they all knew my name. They knew my numbers, and, it's a blessing. So, that's two ways you can do it. Either you can build up your business, get to the point where people can't ignore you, which I like that route because you'll be making money along the way. Your business will be growing. Or, until you're ready to that point, until you feel ready to that point, just go introduce yourself.
Yeah.
And everybody's a somebody, no matter what you may think of yourself, no matter where you think you may happen to be. Like, there's no particular timeline. And the thing is, that timeline could get accelerated if you go and do small little things like this. Yeah, so those relationships do matter.
Yeah. If I could add to that too, I remember I was in that position too. We all came from a previous company, and when we would go to meetings, we would already be hating it, right? So you're just like dreading the meeting, and we make the most out of it. We have fun, we talk to other people. But Albert was really good at building relationships with people in different teams. And he would make a connection to me in my head. Man, I don't want to talk to this new agent. I don't want to talk to this new supervising agent, because just like what you said, what am I going to get out of this? They're going to ask me more questions. I'm going to give more information. I'm not going to get anything out of this. Forget it. Just talk to your manager. That was my main line. Talk to your manager.
Have an upline? Yeah, he knows.
Talk to your manager. But funny enough, we come to a point where, okay, well, we're unhappy. Albert goes and leaves first. And then the rest of the people that were unhappy had a way out, and they had a connection with Albert. So that's one of the big things, that when Albert left, people gravitated towards him because they were unhappy where they were at.
Yeah.
And so if he didn't have those relationships, would he have planned that? Did he plan on switching over? No, but he kept the relationships, and the people that were in the same feeling as us had someone to lean on.
It's true.
That's a good point. I mean,
you're very good at that.
It's funny how things worked out, because it was never like, I never even thought I was leaving that company.
Right.
And I didn't think like, oh, I'm gonna be pretend nice to this guy, so later on in the future someone's gonna pan out for me. Like, I was just thinking, like, how much work is it for me to just say hi to this guy? Yeah. How much work is it for me just to give him some knowledge that whatever I can do to help this person out? And then you never know in life. It was never my intention, but relationships, sometimes they surprise you in the future.
Mm-hmm.
So that's just my personal take on things. I think it's done well for me to a large degree. I mean, obviously there's been certain situations that didn't work out to my favor, but then again, it's like, that one situation doesn't define me. So why not just go and do it?
Mm-hmm. Yeah.
Right. So speaking of relationships, we got one of Marlon's agents here. We got Jantale, not to be confused with Jantale. But he's been focusing, at least I haven't got a chance to talk to him directly about it, but just looking at his numbers, looking at his productions, he's helped over 27 families last month.
Nice.
Looks like a lot of it happened to be through IULs or whole life policies for the infinite banking concept and the be your own bank type, all these different concepts that people throw out there. And, a lot of people are curious about it. A lot of people don't understand it, but you have to have a relationship with the client to be able to move around that much money. You have to help them understand their relationship with the banks versus the relationship with their own policy, because that's going to show the added benefit of, why this type of tool could help you out. So without further ado, Jantale Jones joining us out of Orlando, Florida. Is that right?
Mm-hmm. That's it, Orlando. Yep. Thanks. I appreciate it, Albert. Glad
Absolutely.
To be here.
Yeah, thank you for coming on and sharing a few words. So, how was your month last month? What'd you think of it? Was it something that you planned for, or was just kind of played out that way?
No, it was outstanding, bro. I'll take 27 families every month. You know, that's cool for me. But I didn't. I'm just. I think when you consistently do the work day by day, then I feel like you can have pretty decent numbers. So that's where I was at. I had kind of just been pretty consistent in my effort, and it worked out well. I think maybe I had one or two larger deals that helped, but just doing the daily work, it turned out to be a pretty decent month for me.
Right. And correct me if I'm wrong, but I think you used to focus a little bit more on final expense and, different types of insurance. Now you got into some more of these IULs and whole life policies, more cash value centric. Was that a conscious effort or was it just something that just played out?
Well, to be honest, I think I still focus on final expense and term. I think that's probably the bread and butter of most of the people we talk to, what we do here. So, but I just went through a few books on it. I've learned quite a bit about it, and these high cash value policies or the infinite banking concept. I mean, they're amazing, bro. They're like just hands down amazing. I'll try not to start yelling or get too loud. As Marlon knows, I'm pretty passionate about it. I think it's pretty much something almost everybody can use. So when the opportunity's there, I'm definitely going to talk about it. But I'm not trying to speak about that to every person because it's definitely not for everyone. But it's just an awesome tool, a financial tool, and I just believe in it. We're here to help families, and if I can help them in a bigger way, then I'm gonna do that. And I think for a lot of people, it makes perfect sense to do.
Okay. So, what sparked your interest with this concept or using this type of product to serve clients' needs? Was it that you're just like, oh, I'm running to a lot of clients, or is it just something that personally interests you and it piqued your fascination? You said, I need to learn this.
Yeah, I think it was the latter. A couple years back, I just tried to get more serious about my craft and learning more things. And till this date, I don't know if it's a more common thing or I'm just in a space where I hear about it more, but I hear about it all the time now. But I probably saw a video or something that was explaining it. And then, I got the Nelson Nash book, who was kind of the founder of the infinite banking concept, and then ran into some other books, What Would the Rockefellers Do, and things like that. And the more I read about it, the more exciting I got about it. Once as when I got more information, I just got more and more excited about it. It's been a time-tested thing. When you understand the concept of what banks will do with our money as opposed to what we can do with it. I think if, for the most part, if anybody gets knowledgeable about it, you can't help to get a little bit giddy about it because it's pretty awesome.
Yeah. Well, speaking of like Marlon's podcast that he's planning on getting set up, Jantale talks about, I started looking into it, then all these other things started popping up. And so obviously there's the algorithm.
Yeah.
The internet's an awful place sometimes. And whatever you look at, it's going to keep feeding you and feeding you and feeding you.
It's also your phone.
Yeah.
It's tracking it.
They're listening to us right now. But so there's that. But also, I mean, like on a more cosmic sense, whatever you think about the most starts popping up because you're attracting that into your life. So, I mean, like the internet and social media is probably a bad example because there's people controlling it and they're trying to feed you certain things. But, if you're genuinely interested in something and you become obsessed with something, then that'll continue to pop up more and more because it may not even be like all of a sudden it just popped up. It could have been around you the entire time. You were just never looking. Mm-hmm. So, I think it's a really, really interesting concept. And, so if for a brand new agent, is it something you would recommend for them to start? Like, how do you view that?
No, I definitely don't think it's something for, it's slightly more complex than doing a final expense. It's more into it. Being quite honest, for the time you invest in it, probably it pays less than if you do a final expense policy that maybe takes you an hour, one shot, one kill type thing. You make $1,000 where you can have to do 2, 3, 4 appointments to do a high cash value IUL, and you're going to make a little bit more, but it's time-wise, it's not proportionate in my opinion. So I think it's time investment, it's more profitable to do final expense. But again, we want to do right by the client. So if the situation fits and you understand what it is, then I think it's the good thing to do. So yeah, I think for me personally, I don't want to go all down the whole rabbit hole, but it's the economic certainty of the future isn't, in my opinion, it's a little bit shaky. So I think the things like this will really pay big dividends, no pun intended, in the future, because just the way things are. So it's definitely not something for, in my opinion, for a brand new agent to do. But hopefully, if we're all continuously seeking knowledge and getting better and better, it's something you probably want to add to your arsenal at some point down the road.
And let me just clarify my statement. It's if you're a brand new agent, you want to get into it, I'm not stopping you and I'm not telling you not to do it. I just don't think it's a very good plan if you need money, can cash flow right away. Because in Jantale's situation, that's the best case scenario. You could be running a lot more appointments, doing final expense or term or mortgage protection or whatever. You could be doing a bunch of those, and then you make some money along the way. You could get a big policy, and that might not be worth the time. But let's take the worst case scenario. It's complicated. It's a little bit more complicated than all these other types of plans. And then you start presenting, and then you suck. And you can't sell, and then you're stuck without money. And then you're still trying to figure out, how to get my business going. And then it's just a longer time for you to actually start seeing some income coming in. And then it might throw you off from what you originally were going to do here.
Right.
So I just caution brand new agents to do that. And if you're established where you're at and you want to incorporate this into what you're currently doing, I 100% agree with that. I think you should, even though I don't think you should until you master. Until where you want to be financially, you master final expense, you master mortgage protection, master whatever else it is that brings you regular, simpler cash flow. Because sometimes you can get these policies, you can sell them, and then it has outstanding requirements. It doesn't issue for a while, whatever it may be. So it does take a little bit longer time. So I'm just putting that out there.
Yeah. You mentioned too, you're doing 3 to 4 appointments, right? So you got to understand as well the timing for you to get paid, along with the amount of clientele, because this isn't your typical final expense client where you have a bunch of leads and a bunch of clients. It's like a few and far in between, right? So what would you describe the perfect type of client? What kind of assets do they have, or what kind of liquidity do they need to have to even discuss the infinite banking?
I think that if you're trying to, obviously, there's variables like their age and things like that, but for the most part, if you're trying to set up a high cash value or infinite banking policy, really, to be honest, if you should, $300 a month is a bare minimum. So, sometimes you talk to people and they want to do that and they're saying, I'm going to do $100 a month. Well, it's that's not really going to happen, I really, like I said, it has to be the right client, because sometimes people were talking about these type of infinite banking policies, but they keep on focusing on, well, how much life insurance they want. Well, that's backwards. With infinite banking concept, you're really trying to get in as little life insurance as possible and put as much money as possible. So you say that to a client and they kind of go cross-eyed on you. What? Lower my life insurance and increase my payment? That really doesn't work out. So sometimes a person, they've heard these buzzwords and they want to do it, but then they're like, well, I also want a $500,000 policy. Oh, okay, well then that's probably not going to be an infinite banking type concept unless you're willing to pay several thousand a month, which most people aren't. So, I just think they have to have excess cash flow. They got to have not excess cash flow. They got to understand that really, and I'm using 300 loosely, but even 300 a month, depending on their age, may not be as impressive as they think when you look at down the road, because you really got to, overfund these things to make them work well. So you got to, have excess cash flow and kind of understand that concept of what it is. I don't know. Did I answer your question, John?
Yeah.
Okay.
Well, just if we can roll it back just a little bit for the people that aren't familiar with this concept.
Right.
Since you've done the research, what is infinite banking and why did it get started?
Infinite banking, I'll try to keep it short, and then you can ask me to elaborate if we need to. But Nelson Nash started it, I think maybe in the 80s or something. But basically it was, I think almost by chance. He was a forester or something. He understood long-term concepts, and through just his business dealings, he went through a rough spot. And by chance, one of the things that didn't get destroyed in his personal finances was his whole life policy. And he kind of became aware of that and understood it, and then started doing more into it. But what it is basically using a whole life. Some people would tell you an IUL. There's some debate there. We won't really get into that. But using like a cash value policy, typically overfunding it. So, it pretty much based on your age and health, life insurance costs a set amount, varies $1 or $2 depending on the carrier. But for the most part, 100,000 of life insurance is going to cost a certain amount. Now, if that amount costs you $150, but you can put in $300, well, then that additional money is going into the savings portion of the policy. And, then when you think about where we typically save money, which is in a bank, which pays you 0.02, 0.04%. But in these policies, depending on whether it's a whole life or an IUL, 4 to 10% or what that may look like. So your money's growing at a much higher rate. And then because it's life insurance, there's some tax advantages to it. The carriers work with you. So it just became a way that I think was stumbled upon during the Great Depression, when we were in a big trouble. That was the one area that did not miss a beat. They paid dividends throughout that entire period, which was a huge eye opener to people. And then in hindsight, more and more people started putting money into it. And, and that's where the concept came from. I think it became called infinite banking, because if you can fund it to a level where you can then remove the banks and things from certain things, where if you can fund it to where when you need your next car, you can take a loan from your policy, which then you don't have to go through an approval process. You're going to just be given the money. And then if you can be disciplined enough to make that payment back to your policy, just like you would have had to make a car payment if you got the loan, now that all the interest that would have went out of your household staying in your household, and these numbers can really snowball and become really large. And if you do it properly, you could buy your next house, your car, your things like that. So it's probably the best place most of us can save money and still have access to it. That's the other caveat. And there's some other good places, but then because these are pre-tax places, you can put money in there, but you can't get it out until you're 59 and a half and things. And when you start understanding how much we can lose by opportunity loss, you come across, if I only had $10,000, I could invest in this, and maybe you have 100,000 in your 401k, but you can't take it out. But if you have that in your policy and you can take it out, you can use it, put it back, and things like that. So in essence, if you fund it properly enough, you become your own bank, and you can loan yourself the money rather than having to go to an institution to get money if you set it up the right way.
Very good research. Cool. Yes, it does. Love the passion behind it too. So the infinite banking just means like the infinite concept is just you're feeding into your own policy, your policy is feeding back to you, and creating this infinite loop.
Yeah, if you look at the numbers, some people, like, if most of us, prior to understanding this concept, you were pretty much considered saving the money to buy a car is pretty disciplined. So rather than having to take out a loan, you save the money, you go pay for the car cash, you get your car. But when you look at the numbers on a chart, you're still losing because your money earns you money, So if you got to save up $50,000 to buy a car, that takes you 5-6 years, whatever that looks like. You take your 50,000, you go buy your car. Now your account's back at zero, and then you spend the next 5 or 6 years building that back up. Where one of the things that people like about a concept with the taking loans from policy is you're not, and I don't know if this is getting too in depth, you're not really pulling your money out. So you continue to earn compound interest on your money the whole time. So you're not starting at zero again. And then when you pay the money back to your policy, when all that money's paid back, you've never really hit zero. So that compound or that infinite concept becomes bigger and bigger. And when you inject that interest that would have been going to Bank of America or Chase or whoever into your policy, it becomes bigger and bigger, and it's can become pretty substantial over time. And it's also by the nature of the design, your death benefit and your cash is growing, so that at the point of our life where most of us are probably going to actually die when we're old and wrinkled, your death benefit is the biggest, where rather than in the beginning when we're probably not going to die. So it's just a lot of things about it make a lot of sense if you understand how that concept works.
Right. Yeah, producer Bryce and I actually just recorded a video a little bit earlier. I was running some illustrations with John this morning for a couple of clients, and they're illustrating at about 5, 6, 7%. You can go up, it varies, so none of this is definitive, but so if it's illustrating at 5, 6, 7%, that's how much interest is accruing and building up based off of how the index is performing. But if you in that situation like Jantale just described, if you, let's say you need $50,000 to borrow to pay for your car, you can go to the bank and you can pay them 12, 15, 30%
APR. Finance.
Right?
Yeah, right.
And then the finance costs, all that stuff. So you could be paying a bank back that, and then you're making the principal payment and then that interest rate on top of it. Or, I mean, if you have structured your life insurance policy properly, you got with a good agent like Jantale who set you up proper, you were able to build up cash value substantial over time, that compounded over time, and then you have 50,000 in there. You can just take from that. You're borrowing against that at a 4.5% interest rate, and then in the meantime, you're not necessarily just paying that back, because meantime that it formed an arbitrage. There still is that cash value, that as if the money still is all in there, and it continues to build at a 5, 6, 7, 8, 9, 10% interest rate. So you could be making money even though you borrow that money out.
Yeah.
If it's done properly and if you understand how your interest rates and everything work. So, that's a really neat tool that people can take advantage of if you have it. And,
Yeah. But you got to make sure you're dealing with the right clients. Like, hey, so the issue with the social media though, is they sell what it does, but they don't go in through the process of how to start it.
Right.
How to keep it, maintain it.
So I get questions asked all the time. Does this work? Like, I can put in $100 a month and take out 30,000 tomorrow? I'm all like, no, bro, you're not the right client. How do you overcome those type of individuals then? Because like they bring it up to you, then you got to qualify them, and they're not really qualified.
Well, I don't know. I'm pretty straightforward. We're gonna we'll have a few questions, but I'll tell you, it's not magic. It's not anything where you can like set it up today and take out 10,000 tomorrow. I'm direct. I mean, I'm polite, but I'm direct about that stuff, because I'm not going to waste my time trying to have some conversation or drag a person who's never really going to be able to do it to that or whatever. So, I'm just pretty direct that it's a great concept, but, you got to be able to fund it properly. I typically am going to, based on their age, I may give them a ballpark of what they may need to be willing to invest. Or I also sometimes explain people wanting to do this concept understand a lot of times they're not so much focused on how much life insurance they get. And then I say what I just said a little while ago, that, actually the people who understand it the most are trying to get as little life insurance as possible and put as much money as possible. And for most people, if you're not really getting it, that statement alone will clear things up. Like, oh, I don't want that. And then we can move on to something, and you can get you a nice term or a final expense or whatever you might want, because I'm happy to sell that too. It's just if it works for a person, then, we can go down that road. But I'm polite but direct about what it looks like and how that would work. I think also, what you see on a lot of people talking, and they refer to it as an investment, and I just think that's probably not the right way to talk about it, because it's not an investment. If anything, you might want to call it a savings account on steroids or something like that, but it's about saving your money in a very advantageous place rather than investing. So, I think having that conversation will clear things up for people as well.
Yeah, that was going to be my next question. It's like, what if you have a client that does have the money and they say, what's the difference between doing this and then I just put my money in the stock market?
Well, for me, and I could really get rambling on. I think you have to really have your principles in line with what you're trying to do. And to be quite honest, I don't know if probably 8 out of 10 people, they won't get it. But to me, there's a lot of risk in the stock market, obviously. So there's a higher upside, but there's a higher risk. So wherever you're at in your wealth building strategy, I think everybody hears the words, but I don't know if people really, they sink in that you got to have a solid, safe foundation. So if you don't have a certain amount of money saved up, that's solid, safe, it ain't going to grow as fast as the stock market, but it is growing, it's moving for you, but it's solid, then you really don't have no business investing in the stock market or these other things, because you can try and get rich quick, but you probably ain't gonna end up there. So that's my explanation. Is I just try to explain to people that what I'm trying to do for my personal self and people that I'm working with is build things in proportion to how they should be done. And in your wealth building, you need a solid, safe foundation, because things go up and down. The stock market's going to dip every 7 to 10 years. And if you can't afford to ride through that dip, you're going to be in a bad situation. So if you don't have a certain amount of safe money accumulated, then it's probably not smart to invest in the stock market, in my opinion. That being said, if that's what you want to do, it's your money, have a ball, but I wouldn't advise somebody to do that.
That's a good point. Actually, I actually had a lady ask me that question this morning. She was like, well, I have a Roth IRA. Why don't I just put more money in there versus getting an insurance policy? I'm like, yeah, you could do that. But I'm like, there's maximum contribution limits for one. But more importantly, like if you put that money in, market goes down, you can lose money if you put money in this. And the thing is, let's say the bottom fell out, you still have life insurance at the very least. I'm like, so it's designed to be a tool, it's not an investment. So just like Jantale said, so that's a key distinction that you need to make out to your clients. So you just want to lead with, hey, you get life insurance, plus also has this added component, and then you can break that down. So what do you do in those situations when you run into a client? Let's say they're in their mid 50s or early 60s, and they say, hey, I have a decent amount of money. I want to get into the infinite banking, because, realistically, that's probably going to be for most Americans. They won't really accumulate much money until they get a little bit older, especially once they get a little bit more responsible, because in the early days, they're buying bottles and doing whatever they want to do for fun. But as they get a little bit older, that's when they're in better position. But what do you say to those clients? How does that generally work out?
Well, I think we have, just a kind of a discovery conversation with how much money, what are you trying to do? And for me, after we get some initial questions, also, their health and things matter. I probably, to be honest, if we have some basic questions and it seems like it's a possibility, then I think, we're going to do an illustration, and then I'm going to let you see and understand what it looks like, because like John was saying, some people have these visions of grandeur that, okay, I can start doing 150, 200 a month, and in 5 years, what can I do? Probably not a much, you know what I'm saying? Probably not a whole lot, So to me, an illustration kind of clears things up. If we've had some conversation where it seems like it's feasible, then I would put together initial illustration. And we talk about that, and if they're still understanding, or maybe they realize, oh, that's not a big, and they want to go up, and if it's still on the table, then we can get into more details. But I think for me, that clears it up, rather than me speculating a whole lot. But there's some initial conversation that can make it clear it's not going to work. But if it sounds like it would, then we probably move to an illustration. We take a look at that. They see some actual numbers, and if that's making sense, or they're willing to adjust what they can do to make it do what they want, then we can proceed. If not, we can pivot to what's more appropriate for their needs.
Right. Because in those situations, I personally have had to find more delicate ways of telling them, like, you're no spring chicken. You don't got that time for the compounding interest to really do its thing. So I let the client know, I'm like, hey, you may be able to front load this policy if you have a good lump sum of money, and we could do it this way. But it takes takes two things for this money to really grow at that rate that you're expecting. It's going to be a principal amount at the beginning and then time. And while you may have the money right now, you may not have the luxury of time, so just, we want to keep that, temper that expectation. We can run an illustration. Let's take a look at it and we'll see how that goes. And if we have a lump sum of money, if that didn't quite work out, we can always pivot to an annuity. Right.
Definitely.
I got a technical question. So let's say you're dealing with a client early age, let's say early 30s, right? And they have the disposable income. So for your choice from the product wise, you mentioned earlier, it's either a whole life or an IUL. Where do you lean towards?
It's my belief. I lean towards whole life, but we could probably fight all day about that. I think the majority of people would probably say an IUL, because an IUL has a higher upside and it happens to pay us more. So, it's easy to lean that way if you do that. And that's just, I think that's a personal preference. I think that's risk tolerance as well. If you're willing to be more risky, probably an IUL does make more sense. But again, a couple years back, I just decided to get in line with money principles. And if you want to build a solid foundation, then a whole life is the way to go, because whole life isn't indexed on the market. It's going to do what it does pretty much no matter what. And that way you know what an illustration on a whole life looks like is probably more definite than what an illustration on an IUL looks like. So that's the conversation I have. If I educate, I'm being 100%. If I educate them and they say IUL, I may be happy inside because I told you to both, but you want an IUL, so let's run it. But I'm going to explain that an IUL probably has a higher upside, whereas whole life is probably a little bit more stable. So depending on that person's risk tolerance, that'll determine which way they want to go.
Yeah, that's good.
And then front loading makes a difference too in terms of which product to kind of go with. So for all of you guys out there watching, I mean, obviously this is kind of a advanced market kind of sale. So if you don't understand it, you're in a good class of other people. Took us all a while to kind of build up to this point. So if you have any questions in the future, I mean, if there's anyone out there watching that's not part of FFL and they want to contact Jantale and work with you and learn from the master, how do they get a hold of
you? What's my Instagram? Oh, at Jantale Jones. I'm still getting there on social media.
Can you spell Jantale for us?
Yes, it's at JANTALE JONES. Yeah. Jones. Cool. Let me I'm double checking that, brother.
Found you. Yeah. Jantale Jones, right. Just first name, last name. You're good.
Yeah.
One and only on Instagram. Awesome. Has his face in it, so you guys can't miss it.
Yeah.
And then also, if I just want to add, we do have resources. We had Scott Janad before that came in. If you guys look up at our FFL Elite YouTube, you just type in Infinite Banking. He went over a training on the details of the technical details of how it works. And if ever needed, just go to FFL AMS, the Simple Retirement Solutions. They have videos on that as well, and they can help run illustrations.
Right. And as far as utilizing your resources around you and cultivating these type of relationships, like I haven't done an infinite banking with a whole life policy like that. So I mean, like if I needed it, I'd reach out to Jantale and be like, hey, instead of me trying to figure this thing out, how can you help me out with this? Let's do a split. Let's do something. There's always these opportunities out there. So go with someone who has produced results, someone that knows what they're doing. Yep. And I feel with everything that we learned from Jantale today, he's definitely one of those dudes.
Appreciate you, Albert. I appreciate you guys having me on.
Absolutely. So appreciate all you guys coming on and sharing. Jantale, thank you for the knowledge. Thank you for your perspective on this particular topic. Marlon, thank you very much for coming in. John, appreciate your co-hosting. Bryce, producer Bryce in the background. So everyone else that's on here, hope that was something that you can apply. Just think about your relationships as you go through this weekend. Figure out, is that relationship serving you or is it hurting you? And if it's hurting you, I mean, is it time to let go? Is it something you need to go and figure out how to address something to make it go right, to be beneficial to you? Life's short, make the most of it. So for the relationships you do care about, continue to cultivate and build upon that. And let's go and be elite, guys. Appreciate you all. Hope you guys enjoyed the video. Thank you guys once again for supporting. If you guys want to see more of that, please make sure you like, subscribe, click on this link here to subscribe. click on this link for the next video.